February 14th, 2023. This is the 2000 tick chart on the S&P 500 E-mini on Thinkorswim platform. Before I continue, I just want to point out that just go to the bottom in the descriptions. You'll see the timestamps of all the points of interest as well as the trades I took, so you don't have to watch the entire video. I'm going to try to go a little bit faster today so the video doesn't run too long. This is what the chart looked like today. There was a inflation CPI numbers released here in the AM. This is on Pacific Standard Time around 5 o'clock. You see it became really choppy. And pretty much the whole day, everything traded within the big range. So this is how I drew up my chart. Now, originally I had the top of this trading range up here, but then it made more sense to drag it down here a little bit later in the day. I did have it down actually where this open was, and then I dragged it down to here later in the day. Right around when this kind of didn't break through and go to the top, I just dragged it down and used this previous high before the announcement as where the trading range was. And you can see that pretty much prices respected the trading range, did chop around, so I had some trend lines, and there were quite a number of setups today. Unfortunately, I didn't get to take all the good ones, and I took a total of 7 trades. I had 4 wins and 3 losses. Now, I did have a kind of a jumbled mess of trades toward the end of the day, which I'll show you guys. And it was kind of, I should have stepped back, and I don't know if I necessarily broke the rule so much as I should have stepped back and kind of paused and thought about it. So anyways, I'm going to try to go through this quickly so it doesn't take so the video isn't too massively long. So prices opened, and immediately right around 6:36, I see a second entry long. So right here, prices went all the way, made a new low. And so I drew originally a trend line bottom right here, and then I dragged it down to here just to see if there's a bigger trading range. So here I see a first entry long, and then I see a second entry long. Now, I did take the second entry long because it's early in the day. It's only about 6 minutes in. There's still a lot of time in the day to look for a good trade. And this is also would be counter trend at the moment because it's going down. And to take this trade would be counter trend. So I didn't take this trend, and I just wanted the signal bar to close above the EMA if possible, but it didn't give it to me. So turns out it would have worked. That's all right. So right now the EMA is holding, and then I see a second potential trade coming up right here. See it's chopping around. So I see a new high, first entry long, potentially a second entry long. It all depends if the EMA holds. Now the EMA doesn't hold, it actually closed below, but in hindsight, after I drew this trend channel going up, and I actually had this trend channel a little bit tighter down here originally, until later when I kind of had it expanded upwards, but let's just pretend that it's within the trading trend channel right now. Now, had this actually closed a little bit higher above the EMA, I would have jumped on this trade, but I thought it was a little bit aggressive, but it is bouncing off this lower trend channel. So at this point, you have to either decide whether this trend channel is going to be valid or whether the EMA is going to be valid. In other words, if the EMA is going to hold prices back down because it did close below. So in hindsight, I think it would have been a worthwhile trade because it would have worked out, because it's kind of a small risk to take. And then that was another potential setup. So keep moving along, prices keep moving up. And so we're getting close to right here. I see another first entry long, second entry long. Now this one's actually a pretty decent setup because you can see it went down, touched the EMA, came right back up. So EMA is holding. Now, at this point, remember I had this trend channel actually lower right here. So it's getting squeezed between the EMA as well as the top of the trend channel. But in hindsight, if I just waited one more tick and saw this close, which I did, I could have taken the entry right here. But I kind of hesitated, and so I missed the trade. And unfortunately, that turned out to be, I think, a pretty decent entry because it not only came down, it touched the EMA a second time and bounced right up. So I should have placed the order on inside this candle right here, one tick above this guy in the engulfing, would have gotten filled. And even though it kind of came down, the EMA is strong, it holds. And if I had a runner, or if I hadn't gotten my profit yet, it would have gotten me out right there. So then prices keep moving. Right now, it's establishing that the bull trend is pretty strong. I see another potential second entry long. So I see a first entry long, second entry long. However, on this second entry long, it broke below the EMA, it closed below the EMA. The subsequent candle right here opened and closed below the EMA. So I'm not sure at that point if there was an entry. So unfortunately, if this had closed up higher, closer to the EMA, I'd been more readily accepting of taking a trade here. Plus, I also drew, when this formed, I drew this as the bottom of the trading range, and I drew this top guy. So it was at the bottom of the trading range after this red candle formed. And then when the green candle formed, for sure, it kind of confirmed. So in hindsight, I think if this had actually just closed a little bit higher, I would have felt more confident taking that trade. Fortunately, it's a missed trade. So here you can see there's already like 4 decent setups that I pretty much sat on my hands on. And it was did give me feelings of FOMO for sure. Like I missed out on some potentially good trades. So now we're coming up again, and we see potentially a first entry. If this is counted as a new low, because it's actually lower than this guy, it'd be first entry short, and it's coming up on a second entry short. Now this second entry short, when I actually had this trend line down here, when it broke above these guys broke above and it stayed above, I didn't like that it had too many overshoots, so I dragged it up to here. And this actually could have been treated as a second entry short and a potential failed breakout with enough room back down to the EMA. And I didn't take that trade again. I feel like I was gun shy today and I didn't take the proper good trades when they were presented to me. And I took some kind of sketchier trades later, as you'll see. And it looks like it would have filled me. And then for sure, it probably would have gotten me my core profit out. And then it chops around, and that's in another trading range, which I kind of drew and established right there. And so I just kind of, well, just sitting on my hands at this point. Prices continue moving up. Now it's breaking above this trend channel, which is making me think, wow, it already broke when I had it down here, overshot twice. Now it's here, it's overshooting again. So I kind of dragged this guy back up a little bit further. Now, even though this was a failed breakout before, it was in the past. So now that the trend line I'm establishing up here, I don't have to worry about whether this trade was good or bad, because at the time it was dictated by the trend channel drawn at the time. Prices continue moving up. Now I have my first overshoot, and it keeps going. It's in another channel, or another trading range, breaks out, comes back in, looks like it's respecting it. I see a potential second entry long here, first entry long. It might be a second entry long because I saw it repeat down here where it touched and then bounced back up or broke down below slightly. So I also missed that trade, but I was a little bit concerned that it was going to hit the top of this trading range and come back down. However, we already had a proven breakout above previously. So I think in hindsight, I should have just placed an entry here because the EMA is showing to be pretty strong. So unfortunately, that one being the way it was, I didn't take the trade and I missed out on another potentially good trade. So prices keep moving out. Now this big blue line is the top of the trading range because originally it was up here and I still had it up there at the time. I didn't drag it down until later. So it did kind of break above. Prices keep moving. It looks like it's curling back down. It's again touching the EMA, but I don't have a good second entry to take a trade off of. It's just coming back down. If at anything, you would count that as a first entry. It's coming along. So here I see a second entry. Now, I didn't want to wait. I said, you know what? I'm going to get in on this because I see a second entry long is respecting the EMA. This trend line is being exceeded a couple times now. So I'm thinking the strength of the EMA is a lot stronger. However, I don't want to enter one tick above. I want to see if I can get something a little bit lower. It turns out I was too ambitious because I didn't get a fill because the next candle opens right at the high of this candle. So I had my order down here. It didn't fill. It already went up, touched the top of the trading range, and I knew, okay, well, the trade went without me. I already canceled the order because it would have came down if I left it and filled me. Now it's touching it, and now it's breaking down. So unfortunately, I didn't take that trade. It was a missed fill, and I think it would have worked out if, well, even if I took it one tick above, it'd be right here. The high of this is 41.6725, so I would have taken at 41.6750. And if I just wanted to go for 1 point, it was 41.6950. So there was two points there. So I would have gotten my 1 point, and my runner probably would have just gotten out break even. But unfortunately, I was too aggressive and hoping to get that better fill. The reason I thought that was because these guys down here did provide a better fill when it came back again. But this one, this candle just kind of opened right at the high and then just never came back. But that's a lesson learned. It's all right. Price continue moving down. So I don't really see a good entry here. And unfortunately, I wasn't on any kind of setup here to take this all the way down because it was a pretty massive run down. Now, I did see later, I did see later that this is potentially a new low. And you could have said this is a first entry short and then a second entry short because it's kind of like a hidden second entry short. But I thought it was a little aggressive. And then when it closed down here, that's where your second entry short would have been. And then you would have been able to maybe place an order here and ride this down. In my actual very deliberate count, I only saw this as a first entry short. And it doesn't even provide me a second entry short until probably down here. But by that time, the move has already been made, and it'd be risky to take that trade. So prices continue moving down. I see a potential second entry short here because it's a new low, first entry short, second entry short. It bounced off the EMA. It was the first break of this trend line. It made two moves up. So I knew the uptrend or the correction might have played out because it made a first attempt to break one high and a second attempt. So now it's probably going to go back down and test this low. But that was a little bit hard for me to assess all in real time. So had I assessed it in real time and been better or more experienced, I would have placed my trade entry right here. And it looks like it would have filled and it would have continued downwards. So again, this chalks up to experience and chalks up to I just have to see more trading and get better so I can recognize this in real time. Because as you can see, there's plenty of entries today plenty of setups where they look like they were pretty good, pretty high probability. Unfortunately, I'm not as savvy yet. So prices continue moving down. And here we're getting set up and I see a first entry long, a second entry long, but I thought it was kind of near the low and there wasn't that much room to the EMA, so I kind of left it alone. Then prices continue chopping, and now I see, so I see if you count this as a new low, it's a first entry short, second entry short, and then it comes back up. But here you could have said, if this starts a new count, you could say this is a first entry short, comes up, it's a second entry short, and a failure. Also, you could have looked at this as a new high. It'd be a first entry long, second entry long comes up, and when it comes down, it actually makes a higher low right at the EMA. So I saw this and I thought this is actually a pretty decent trade. I want to see if I can get an entry. And I actually put, again, foolish of me because it's at the low. I put my entry down here. I forgot exactly where, but down here to hoping to get a better fill to reduce my risk reward. And again, even if I put it one tick above this guy, the signal bar, I wouldn't have gotten filled. I would have had to have put it one tick above this bullish bar to ensure any chance of getting filled. So that was another missed opportunity. I have to get better at realizing when I should just, pull the trigger, take the chance versus, trying to get a better fill. But prices keep moving. It's chopping around. Now it's in the trading range. Comes up, comes back down. This is where I actually took my first trade. I saw a first entry long right here when it broke above. And then I'm thinking, okay, there's going to be a second entry long coming up. So I took my second entry long. I counted it. Even though these are all the same highs, I suspected there was a second entry long hidden. So I actually took this trade right here at 31.75, one tick above this guy. Actually, I actually got a better fill. It's like 31.75 is actually a little bit below this candle. So I was still trying to squeeze out as much profit or as much risk reward as I can. I got filled, goes up, and then it takes out my runner as well. So then prices keep moving. And I see another second entry long here. Now this one was like a hidden second entry long, and this one's more deliberate because you can see a first entry long here. A second entry long actually formed right here when this guy broke above. So I didn't take this trade just because it was below the EMA. EMA is flattening out. It is within the trading range. And even though this is a decent signal bar, I didn't really feel that, I just didn't feel confident in taking that trade at the moment. So I pretty much left that trade alone. Then prices kept moving, chops up, is within the trading range, breaks out, comes back in. This is where I take my second trade. Now this is definitely aggressive because I saw, okay, this can be counted as a one high, So I saw it's the first entry long, and then I said, okay, the EMA is holding again. It's kind of changing character. So I put my order one tick above. I get filled, but this candle is pretty not that great follow through. And even though I got filled right here, I was fortunate enough because I am buying at the high of this trading range, which is risky. I was able to get filled, and then my runner gets stopped out right before this big red candle completes. And had I stayed in it looking for more, I would have gotten stopped out for sure. So it was just a 1 point scalp, which was good enough for me. And this 1 point scalp, I try to get ambitious later in the day to try to score more than 1 point, and it kind of bites me in the butt because that's not really my trading rules or trading plan, which I should have stuck to because I would have turned out better. And you'll see those a little bit later. So prices continue moving down. It's not coming back to the EMA. I draw this trend channel. It breaks out. It's kind of oscillating. EMA is kind of holding prices down. I'm just kind of sitting on my hands at this point. I'm just not taking any trades because I don't see any good trades. But right here, I do see a potential second entry short and a fail breakout because this is where my trading range is. I consider this a new low, first entry short, second entry short. But this candle is a bullish candle, and I don't like taking a short on this bullish candle. Even though there's enough room back to the EMA, it would have worked. But at the time, even though it's a failed breakout, if this had closed a little bit lower, not halfway, but maybe down in the middle last third, I would have felt more confident taking that entry. But this is such a strong candle, I just didn't trust it. Even though in hindsight, you could say there's one leg up, second leg up, and it could have played out. But in real time, I didn't feel I saw enough to convince me to take the trade. So prices keep moving down. And I see a second entry long here, first entry long, second entry long. It's right where the EMA is. Now, this is a so-so trade because it does have a good signal bar. It does close above the EMA, and you have a double top. But at the time, again, I was just not sure what I was fully seeing because I didn't know if it has enough room to get to the top because EMA is cutting through all these candles. So it could have easily just kind of failed and come back down because this might not have been a second entry long. To get it, I'd have to place an order on this candle one tick above and take it as it moved up and pulled me in. So in hindsight, this is a decent candle. It was a double top. There is enough room to get up here. Maybe it was worth a shot, but this big tail made me a little nervous. If the tail was smaller and it was just a more compact candle, or it closed at the top, I would have been a little more confident taking that trade. So prices kept moving up. And this is kind of an interesting trade coming up that I saw. So it's in the trading range now. It's also had 3 touches. Now, this is a trade that I thought about, but I didn't take because it doesn't quite set up the way I usually like it. Because when I see things like this, I know there's a bunch of shorts waiting up here with their stops one tick above these 4, or actually these 3. Had this guy come up and touched it, I probably would have felt a little more comfortable putting my trade right here as a potential runner, a potential move to take out the runners and at least score 1 point as a scalp. I usually would take this if the context was a little bit better. If the EMA was coming up and these guys were coming down with higher lows, in other words, it was kind of wedging up, but it was kind of just oscillating within this trading range. So I wasn't sure if it's going to touch this and break back down or even just go 1 tick above and then fake me out and come back down. But this is just something I like to point out to myself to like, oh, this is another one of those like stop running trades that I have seen in the past. So, but shortly after you see a new high, it comes back into range, first entry long. Now here, this signal bar is closing above the EMA. It is at the low of this trading range. So in all honesty, that was probably a pretty decent trade to take a risk on because there's plenty of room up to the EMA. And had I taken the trade, it would have worked. But that hindsight's 2020. So then I see also a second entry short here because if you count this as a new low, first entry short, second entry short. Now, what I did is I drew this trading range, then I drew a second trading range up here because it looked like, this bottom, I mean, you could certainly draw a second trading range all the way down to here and have this as a, excuse me, resistance up here. But this is a decent candle. I mean, it's very doji-ish, but had this candle actually closed at the low, I would have been more ready to take this trade because there's enough room to the EMA for a quick scalp. But unfortunately, I just kind of watched it and let it go. And it turns out it would have worked. So this is another trade that I took. And so I did see, okay, it's a failed second entry short. So it's a first entry short, then I saw a second entry short, and it had failed because it's double, it's hitting right here. It's getting ready to fail. So what I did was I actually entered right here. And you're going to see that it's actually one tick right here, 126.75, about the same height here. And I got filled. And then prices, and there's my core. I got filled because there's enough room to the top. So that was a green trade. That was my third trade of the day. And then prices keep moving. And here I see another setup, very similar to this previous setup. So I see 1, 2, 3, 4. And I believe, since this is also, this line here is the open, the regular trading hour open of the day. Because a lot of people don't trade the pre-market, and there's way more volume in the regular hours. So this is the open of the day. I saw it test 1, 2, 3, 4. Not only did I see it test, I figured since the EMA is moving up, not unlike this one, that if I put one trade entry one tick above, that's probably where a lot of people have their stops for people who went short. Might be able to scoop it up. But I didn't take the trade, unfortunately, but I saw it. And I just like to point that out again to myself. This setup is very similar to this setup right here at 920. And had I had my order there, it would have gotten filled and likely hit my runner pretty shortly after. So prices keep moving up. I end up drawing this trend line, which touched 1, 2, and this top of this trading channel was actually lower at one time here, but then later when it kind of violated and touched up here, I dragged it up to this point. Prices chop around, and it kind of breaks down, touches the EMA, comes back up. It's not respecting the trading range right now. It comes up, and I do see a second entry short, but it's counter trend. So even though it's new low, first entry short, second entry short, this candle is pretty bullish. So I don't like to take that risk, even though there's enough room down to the EMA. And you can see I drew these measured moves. These are just for myself to see if a potential trade has been played out or a potential move is played out and is ready for a correction or a reversal. So prices keep going down. Breaks down below the EMA. I saw two measured moves down, so I thought maybe it'll come back up, but I also saw maybe this is one big leg. Well, this wasn't established yet. It'll show up a little bit later. Prices continue down. So right now I don't see any really good setups. I could see this as potentially a failed second entry long. So first new high, first entry long, second entry long, but I didn't want to take this trade just because it was potentially right close to the bottom of this trading range. So I don't know if it's the trading range is gonna hold or it's gonna break through. Turns out it breaks through, but it comes right back in. Prices continue to move. This trading range is still being respected, which is good. But now it's breaking down below. It's coming back up. It tries to go back in. Comes back, almost touches the top of this trading range. EMA is holding. I do see a second entry long here, but I didn't take it. I didn't really do anything with it because here it just feels congested. It's a new high, first entry long, second entry long, but this is a terrible signal bar. It kind of touched EMA. EMA could be argued that it's kind of holding, but maybe not holding because it's just moving sideways at this point. So even though there's a second entry long there, I didn't feel it's a high probability of worth taking. Turns out it would have worked, but you don't know it at the time, or I certainly didn't. And then this is kind of toward the end of the day where I kind of just didn't take very good trades because I know I missed out on several good opportunities back here in the beginning of the day. And so certainly I was feeling like I should have gotten more trades in or I should have made a little bit more profit. And that's kind of where it bit me later. So I see potentially a fail breakout. So when I take this fail breakout, because it's in this smaller trading range right now, I saw, okay, well, there's not really a second entry, but it is a failed breakout. I am going to take that trade and see if it moves in for me. So I take it here at 41.51.50. So just go ahead and zoom in here. 41.51.50 is one tick above this guy because this is a pretty decent close. I get filled. And instead of taking my 1 point profit that I usually do, I said I'm going to try to get it all the way back to the top. I'm going to try to get not just 1 point, but maybe 3 points. So what happens is I could have gotten my 1 point profit and gotten out, but I didn't. I waited and it came down, hit my stop because I moved my stop right to here, 49, 41.49, which is a little conservative right about here. One couple ticks below this guy. That comes back to bite me. So then I see, okay, well, as a new high, first entry long, potential second entry long setting up. So I'm going to get in early. Again, that was a mistake because I took it at 50, 41, pretty much 41, 51, 50, the same one tick above this guy. And I said, okay, now it's ready to move up. I'm definitely going to take this trade. So I was just lucky that when it kind of moved up, I mean, I'm not lucky. What I meant to say is, had I just taken my 1 point, I would have gotten it and my runner would have got stopped even. But again, I was looking for a big move up, which doesn't really follow the rules that I have set forth, which just goes to show that I shouldn't just change my rules on the fly. If I'm just looking at a scalper's profit all the time, that's what I should go for and let the runners make up the difference on really good moves. But I didn't, and I got stopped out again. Then I see a lower high. So I see a first entry long, second entry long, and then there's no real second entry short because this candle is about the same as this candle. So if you counted this together, it'd be first entry short. There's no real second entry short unless you're looking for hidden ones. But I saw a lower high and I said, I've been wrong going long twice. So I'm going to try going short. So I end up going short one tick below, which is 41.4750, 41.4775, which is actually right here. Enter on this candle, hoping for a little bit of a better fill because I noticed that the EMA is holding. And I do get my core profit. Now, this time I wasn't as ambitious. I said, I'm just going to go for that 1 point. And I did get my 1 point, and I just left my runner here looking for a bigger move. Excuse me, I left my runner one tick below my entry, and it gets stopped out. Now, my usual practice is just to drag the runner one tick below or one tick above the previous candle. If I'm going short, it's going to be one tick above. If I'm going long, it's going to be one tick below. And I would have been able to scalp out a little more profit. But again, I was kind of playing with my usual typical trading rules, and kind of goes to show that I should just stick with what was working. So then prices continue moving down. So here again, I see a second entry short. So it's new low, first entry short, second entry short. But this is actually a bad trade. The reason being is this signal bar is very strong. So to take a second entry short right down here, which is what I did at 41.4850, one tick below this guy, even before this guy closed, I didn't wait for confirmation. Even though I had first entry short, second entry short, the trend is breaking out at an overshoot, and then it's kind of coming back out this side. So all that added up with, well, this candle isn't very convincing to take a short. EMA is flat, so it's not giving me much indication. If it is telling me that prices are holding above it, which all should have told me like, hey, you need to stop, wait, don't take this trade. But as you can see, I was already kind of in a jumbled mess of trading. So it wasn't quite emotional trading so much as it was kind of breaking some of my previously established rules to try it, see if they would work. Now, in other times it might have worked, but you had to look at the context of what was going on. Prices weren't moving as much as they were before. Everything's kind of congested. So to ask or to look for a bigger move is kind of ambitious. Even asking for a runner, like in this type of trading consolidation, it'd probably be better just to be binary. Buy completely in and take the trade completely out. But again, that was the last trade of the day. Turns out I get stopped out because I had my I had my stop up here because I thought I was going to go back down, and it stops me out. And if it didn't definitively stop me out, it would have on one of these candles. So at that point, I decided, you know what? I've gotten like 3 of the last 4 trades now were all red. I'm going to hang up my hat. And so I just kind of sat, watched this trade sideways. It's close to the end of the day. And even though I'm ending red on the day, it was kind of like a good lesson that I shouldn't let FOMO hit me. And I also shouldn't hesitate when a good trade was setting up, especially back here early in the day when things were clearly showing me there's some good trades to be had. So that's how I saw it. Hopefully this is helpful. It was helpful for me.